Welcome back. Hope everyone's enjoying their Thursday. I certainly am, as evidenced by the fact that I'm giving you not one video today, but two videos. One now, one in a few hours. Just feel like giving you two videos today, so that's what I'm going to do. Don't forget that if you enjoy what you're seeing, hit the like and subscribe button in the corner of the screen, and remember you can also skip around using the timestamps in the bottom of the screen. Let's begin. So first, before we get to the markets today, let's give a little wrap-up. Markets have been all over the place lately. Let's do a little summary of how they've been performing the last week. So prices have been kind of flat, hovering around 30, dancing above it, below it. On the other hand, greed and fear index reached the second lowest point in history on Tuesday of 8. That's the lowest since March 2020, the pandemic month. BTC, on the other hand, is they're also on the longest losing streak ever, 7 weeks going on 8 weeks. That is beating the previous losing streak of 6 weeks post Mt. Gox. Shows how bearish the markets have been lately. Additionally, the Asian investors appear to be trading very heavily in these markets. The terror debacle seemed to kind of stimulate their trading senses. The premium during Asian trading hours is the heaviest it's been in 2 years, which basically just means there's more trading going on in the Asian crypto markets than in the Western crypto markets. We don't know if that's buying or selling, but they're trading. U.S. institutional investors, they've been a little skittish, buying and selling, a little bit more selling. On the other hand, some whales have been buying. I talked about the mainstream institutional whale, possibly a university endowment fund that bought $280 million in the Purpose BTC Investment Trust Fund earlier in the week. It's a big purchase there. Another crypto whale. This time he was worth $4 billion. He bought it to the tune of $230 million in the markets a couple of days ago, and he previously timed the market perfectly with his last two purchases, December of 2018 and July of 2021. He bought $150 million of Bitcoin one time and between 300 and 400 million the other time, and that was literally right at the market bottoms that he bought in. So the fact that he's buying, that's bullish for Bitcoin. Now let's get into the markets for today. Just hold on one. So now the markets today. So flat again, 30,300, up 4% on the day, so that's good. But same thing, just prices kind of finding that floor price, 30K, above it one day, beneath it the next day, kind of deciding what direction they want to go in. Green fear at 13, that's above 8 2 days ago, so it's going up a little. It's 12 yesterday, so it's in line with that. More directional news, Coinbase Premium is negative, so that means that there's more selling than buying going on Coinbase. So U.S. institutional investors, as I mentioned, are a little skittish, a little bearish. We know that because Coinbase, this came out yesterday, 76% of their trading volume is institutional investors these days. I mean, that's a lot, 76%. Coinbase, you tend to think it's the retail trading platform now, 3/4 institutional traders. And this here shows it, so much more institutional. And also, the institutional trading base has been growing at a much faster pace than the retail trading base. From a year ago, retail traders traded $120 billion in volumes in the first quarter. A year later, this past first quarter, it went down to $74 billion. So that's about a 50% decrease, whereas institutional traders on Coinbase, it went up from $215 billion to $235 billion, about a 10% increase over the year-over-year quarter. So retail traders aren't that interested, particularly in the U.S., but institutional traders are. Says here, it's usually they're dominating the BTC market according to CryptoQuant. That's right, and institutional traders tend to be a little more long-term. They trade less on momentum, on feelings, on spur-of-the-moment decisions. They use a little more due diligence. So it's going to be less volatile price movements as we've been seeing when the markets are dominated by institutional investors. It also means prices are going to be in line with NASDAQ and Dow Jones because those are mostly dominated by institutional traders too and not retail traders. And CryptoLock put up this year, it just goes to show how similarity the price patterns of the last 6 months have been BTC on the top, NASDAQ Composite on the bottom, almost exactly in line, correlated with each other. The only difference is the last week or two here with the terror debacle that didn't really seem to affect NASDAQ. Interesting, no one never pointed that out, but thinking about it, yeah, I didn't really hear about the NASDAQ or Dow Jones being affected by it, but of course, Bitcoin down there went down big time. So that was the only change. There's a closer look at that. CryptoLark, he also put this out that bear markets, they are 2 to 3 years. He defines a bear market as the one low to the next market high. So the low of that bear market, how long it takes to go from there to a new high, going past any previous highs. He points that out as 2 years, and then I kind of point it out as more like 3 years, which is the time from the previous high to the new high. So that was just about 3 years of the last bear market cycle, 2017 to 2020. And then, as you can see here, the 2-year mark is right around here, beginning in 2018 at 3K. That was the low, and then it took a full 2 years to get up to the new high, as CryptoLark pointed out, which is the beginning of 2020, late 2019. So bear markets, they're 2 to 3 years. It's annoying. What are you going to do? Funding rates fall to yearly lows below 29,000. So when funding rates are negative and they're falling, that means that shorts are just more, the short positions are more in demand. Obviously, there's an equal amount of shorts and long positions in the market at any given time. But when there's more demand for one side, like the short side, then the shorts have to pay a small premium to the longs to entice them to go into that trade, because they wouldn't necessarily want to be going into it anyway. They need just a little added incentive. So that's what's going on here. So falling funding rates tends to be a little bearish, but the last time the funding rates were this low was July 2021. That's the month we keep hearing about. That was the last bottom price cycle right there, so that could actually be bullish news. Who knows? Moving on. 21 Shares launches 2 U.S. index funds tracking major cryptocurrencies. Now, this might sound familiar, 21 Shares, so that's the same company that launched the 2 spot ETFs in Australia a week or two ago. So an index fund is different than a spot ETF. The spot ETFs, those were in Australia. So those do not actually hold a cryptocurrency. They just trade like a stock. They look like a stock, and the price mirrors Bitcoin, but not exactly. So it's less risky. If the price of Bitcoin or crypto just plummets, it's not going to be quite as affected in the spot ETF, since they don't actually hold the assets, whereas an index fund does. So like there are 2 index funds. One of them is holding the top 10 cryptos, and the other is holding a basket of mid-sized emerging digital assets. So those actually do hold, so they do track the performance exactly. So whatever the average performance is of the top 10 coins, then this index fund, the first one, it'll perform exactly in line with that. So it's more high risk because it actually holds the asset. So if one asset plummets, then it does affect the index fund portfolio. But they made some good points here. These are index funds are attractive investments. On one hand, the basket of the top 10 coins has consistently outperformed the S&P 500, the Dow Jones Industrial, and the NASDAQ composite pretty much every year. Can't argue with that, so you might as well hold the index fund of the top 10 cryptos. And, as usual, they're kind of targeting people, the credit investors or institutional investors who just don't want to have to deal with the wallets and passwords and upgrades and worried about losing your passwords and hacking and stuff like that. All that gets taken care of with the index fund for a small fee. They usually take 1, 2, 3% out, nothing major. Moving on, the cover story here. So there actually is one sector of tokens that have been mooning like crazy out of nowhere, very quietly the last week. That's sports tokens. Socio-fan tokens are like 40+% after Chili's rolls out mainnet upgrade and token burn. So first I saw that, I'm like, wow, some altcoins are actually pumping. So I went to the different sectors here in CoinGecko. It's unbelievable. The sports sector, last 7 days, up 82%. And then obviously every other sector here down 18%, 17%, 13%. Terra ecosystem down 78%. It's up 82%. That's sports. That's ridiculous. Just no one's been talking about it. So I looked at which coins are in the sports portfolio. So it's a bunch of European soccer fan tokens, Paris Saint-Germain fan token, I'd like to go Madrid fan token, Manchester City fan token. So I did a little more research. So what's causing all these coins have just been pumping about the same amount, the 7 day up 50%, 77%, 150%. So what's been causing this? So first I thought it was the Algorand partnership with FIFA World Cup to be their lead sponsor. They announced that a few weeks ago, and the World Cup's in 6 months, but they announced that around May 3rd. The pump didn't start for 2 weeks later, yesterday, like 2 days ago, May 17th, May 18th, you see? So it looks like the Algorand partnership, it didn't actually cause the price pump, but sometimes those things, they kind of just stimulate everyone, that starts momentum, the developers start talking, partnerships start happening, just get things, it mobilizes people within that ecosystem. It looks like that is what happened. If we go here, so the specific development, so Chili's is the blockchain, they have a token, so that's the biggest token in the sports sector, and then Socios is the sports entertainment platform. They don't have a token, it's the platform in the Chili's blockchain, and then on the Socios sports entertainment platform, then all these fan tokens are underneath it. There's a bunch of NFL team tokens, there's a bunch of MLS US soccer team tokens, there's a bunch of European soccer team tokens, those are the ones here. So the big developments of Chili's, the blockchain, they came out with their mainnet they launched, so it means a bunch of fan token test surveys are coming out with the main launch. The Pepper Swap, it's a decentralized exchange, that got released with the main swap. They also did a token swap a couple days ago with the mainnet launch. There's a lot of development happening there. Additionally, they got listed on Bitpanda. That is a medium-sized centralized exchange. Then also they kind of just point out here that, in the stressful market times, the terror in the market is going down, sports and entertainment is a valuable escape. So the sports coins, they just kind of got a lot of the positive energy there, and they got the pumps. Additionally, the Premier League, they're kind of winding down the playoffs right now, so it's getting a lot of attention right there. And that all combined with the Algorand partnership, I think that's what led the sector to start pumping. That's all for today. I'll be back with a new video in a couple hours. Hope everyone enjoyed this one. Good day.